Last video I spoke about this CME gap being filled. Since then, Bitcoin formed a new CME gap and has already filled that gap in as shown. We see this white trend line from recent local top has been broken on CME chart. This fib retracement shows a move to 93,500 is possible while overall still in a downtrend move from 98K. This lines up with the yearly open level, which before the move to 98,000 was a good area to short. ASFP of this last high is also where Bitcoin could reject lower, as it lines up with all the confluence shown on the left chart. This green VWAP line, POC and VAH could provide a decent short trade should a rejection show on the chart at these levels. Price needs to break these levels at current price to enable us to look at a short from higher. Even though price is testing this trend line, I do not think right now is a place to take a trade and patience is required for a better spot. I am looking at these two levels above for a short trade entry. Note that I have two yearly open levels now, one from 2025 above and one from 2026 below. If we break current levels, then all eyes on these two levels above as a potential short trade depending on the reaction at these levels. Once again, we look for a SFP of this last high which could line up with these levels and the VWAP. I will now remove some levels that are no longer valid. You can see how the same trend line on Bybit chart has not broken out yet when compared to the CME chart. So to recap, if Bitcoin can break current level and trend line, then we look for a short trade above at the multiple confluence levels shown. I particularly like this level here as a potential short after breaking the trend line then dropping back below it to go lower. Firstly though, price must get above current levels. Bitcoin could just drop from here and move down to support levels below where we could look at a small long trade. Remember, the Wyckoff plan is playing out so far, and I expect lower prices eventually. The daily order flow shows the whales are selling more every day than buying, as we see here. Sells are higher than buys each day. When open interest rises, a large inflow of sells come into the market as shown by the delta. The CVD shows a bearish trend confirmation. If the price is also falling during this CVD buildup of sells, this confirms the downtrend, showing that the price drop is backed by high conviction selling rather than just low liquidity. Recent trades are shown. All my trade setups are in my videos. Thanks for watching. Please hit like and subscribe to support the channel.